Welcome to the Building Interest podcast presented by Leader Bank. In Season 2 of our podcast, we've been exploring what it means to be a leader through conversations with leaders from within the communities we serve and from across the world of banking and technology. Each conversation focuses on our guest's personal leadership journey and provides insights on what it means to be a good leader. In our last episode, we were joined by Marty Sunday, an insightful leadership advisor with more than 36 years of leadership experience. He talked about his journey of becoming a leader and the most impactful advice that he received over the years. On today's episode, we're joined by someone who was integral to the Leader Bank's founding and continues to lead all of our bank's finances. Being a chief financial officer in the current banking environment is no easy feat. So let's dig into his journey of becoming CFO and see if we can uncover a bit how the recent bank failures are impacting financial portfolios, risk management, and other things around the industry. I'm pleased to welcome to the show, Brian Taylor.
Thank you, Greg. Glad to be here this week.
I think it's exciting. We've had so many interesting people on the bank, and we haven't really focused on finance. And it's kind of a key part of banking, isn't it?
There's a lot that's happening this year in the finance piece of the banking.
So, Brian, you're SVP, Chief Financial Officer here at Leader Bank, and you have been really since the bank's inception more than 20 years ago, if I'm not mistaken, pretty much right from the start. But let's go back a little bit past that. So before your time at Leader Bank, and sort of start with the path leading up to the bank's founding. How did you initially get into finance, and was this like a math economics thing that you were just really interested in growing up, or you sort of stumbled into this career, and how did you come about having this financial skill set that would set you up to one day become a CFO?
Okay, you want to go all the way back.
I want to go back.
Okay.
There was a time before Leader Bank.
There was a time
Seems long ago now, doesn't it?
Seems like a different person, different world. So I guess even as a kid, I liked math. I was interested in, it all made sense to me. 1 + 1 = 2.
And nothing else.
Nothing else.
It's either right or it's not.
And exactly. Right or wrong. On the flip side, I really had no artistic ability. I couldn't sing. I couldn't do any of those things. I liked to play sports, but I wasn't going anywhere in the sports world. So I took a career path, went to college, and even in college, I didn't exactly know what I was going to do, but I knew I was going into the business side. And then, so I thought, and I'll get to that in a second. And then second year, you had to make a decision. So I said, okay, I'm going to do accounting. So fast forward, I graduate, I'm an accountant, and then, graduate, move out of the house. A couple years later, my parents are cleaning out the house. They bring in a couple of boxes from the house. They're like, hey, these are yours. Do with them what you want. And I'm going through them, clean them out. And there were 2 books in there about accounting that I had taken out of the library.
And never returned.
And never returned. Okay. We probably don't want to confess
interesting.
that. But never returned them. And they were accounting books from when I was in high school.
Wow. You had these books back then, and now they came back around unexpectedly.
So maybe I was always destined to be an accountant.
Okay.
And then it just took me that direction.
And you started as a staff accountant at some firm, or how did
right,
that
so
go?
After college, I went to what they called it the Big 8 back then, which that'll date me by itself because there's only Big 4 now. Great experience. So I would recommend that type of experience to everybody. And the reason is, so every couple of weeks, every 3 to 5 weeks, you go into a new client. You're working with new staff. You're working with new managers. So you have to be very adaptable. The clients have different needs, different experiences. You don't know if the staff was on the same job the year before, or if they're brand new, or if they're right out of school. So it's great training. And things I learned, I had a lot of mentors and created a lot of friends that are actually still friends to this day. And pieces of advice that they gave me were, listen, you're going to go all these different places. People are going to know more than you. Like, you might be the head on the job there, but you might be working for someone that's been working there for a while. They're going to know more than you. Go with it. Use their knowledge. Don't go in thinking you know everything. It was just a great piece of advice that was consistently said early on in my career.
And it kept speaking to you as you gained more and more knowledge. You kept on with it, obviously.
Exactly. it was one of those things that it's so obvious and so true. Like, we can learn from literally everybody. Everybody in a business setting, in a life setting, knows something that you don't know. So why not tap into it?
Absolutely. And so were any of these clients banks, or was banking not really part of what you were thinking of at this time?
So my expertise, if you will, was defense contractors.
Oh, okay.
Very technical, super, super regulated, even more regulated than banking maybe. I had one bank client. It was a bank that, this was in the 1980s. It didn't have a long life expectancy. And we gave it a going concern opinion, which meant that we didn't expect it to last another full year. So that was my one banking experience. I'm like, oh, I don't know.
And it was a bank that wasn't doing well.
And it was a bank that wasn't doing well. I was like, okay, well, maybe this isn't the best choice, but...
so something must have happened between that and when you woke up and said, I'm going to be the CFO for a startup bank.
Right. So there's a couple things that kind of happened. One, it was just time to move on from the public accounting world. There's a lot of hours. It can wear on you after a period of time. So you just need to make a change and get into private industry. So I went to a subsidiary of Fleet Bank. It was a startup subsidiary. So I guess a couple of dots are already starting.
Okay,
to
yep. So you're
here.
starting to see a fledgling company sort of starting up, but under a larger bank's umbrella.
Exactly. It was a different company in that it was a startup, but at the same time, it only had a 5-year life expectancy.
Okay.
It was.
Can I ask why that would be? Why would you start a bank and only give it 5 years?
It wasn't a bank.
It was a subsidiary of the bank. Gotcha.
Correct.
Okay.
So the subsidiary was created to work out the assets and loans that weren't paying from the old Bank of New England. So it said, okay, it should take you about 5 years. So there was this mass hiring, put all kinds of processes and procedures in place, which I really enjoyed that aspect, which I guess that kind of plays in later on as well. And then you go through the 5 years, and then the company winds down. So the company's winding down. Now I'm looking for a job. So now this is where fate plays a role, I guess. So I'm looking for a job, and the bank in my hometown is looking for a controller. So I'm like, okay, this is perfect. I apply for the job, I get the job, so now I'm working at this bank. I'm loving life, the bank's doing well, it's growing, it's making money, everything's good. And then along comes a larger bank and says, hey, we like this bank, and we're gonna buy you. So I'm like, okay, well, that's the way it is.
And there wasn't room for two controllers?
There was room. They offered a job, but it was up in like the middle of nowhere, Maine.
Oh, okay.
And my wife I had no interest, and my wife definitely had no interest in going up to, I think it was called Lewiston, Maine.
I've heard of it.
Yes, I've been
But I couldn't
there.
tell you anything about it,
Right.
unfortunately. No offense to anyone that lives or loves
I'm
Lewiston.
sure it's a great town. It's not near the coast, though, I don't think.
Okay.
So
that wasn't for you.
that wasn't for me. So that
But now you've amassed all this experience. You've done small little analytical stuff for smaller clients. You've done this 5-year wind down of these assets that came into a large regional bank, which, by the way, I'll date myself. I've banked at Fleet myself.
Yeah.
So I go back a little ways as well. Never worked there, but I did bank there. And then you moved on to be controller of the soon-to-be bought-out bank in your hometown.
Correct.
So now you're at a crossroads.
But now I'm at a crossroads. Now I need to, I've got a couple little kids at home, and now here's where fate really steps in and plays a nice little role. Somebody that used to work at the bank was now working for this person named Cecile Tooley, who's starting a bank.
But hadn't started it yet.
Okay. So this is in the very beginning of 2002. Yep. And so I go and I meet Cecile. And Cecile is full of energy, and he's like, oh, we're going to be $1 billion bank in 10 years. And I'm like, okay, this seems a little bit. I just came from a bank that was 200 years old, and it took them the full 200 to get to $1 billion. So, and Cecile's saying, hey, we will be 10 billion in 10 years. And he's very convincing as well. And I'm like, okay. And I'm like, startup bank, not a lot of them around. I go, super intrigued by the opportunity. So the timing worked out. I left my old bank on a Friday, started with Shashil on a Monday, and then the rest is history in a way.
And that was it. You rolled in, you became the CFO, and you had in front of you a non-existent department to build from scratch.
We had a non-existent everything to build from scratch. On the day that I met Shashil, he showed me the branch, and you could literally look down from the first floor to the basement. So we had no space. It was all under construction. Right. So we worked under some temporary offices.
So now I want to ask you to describe a little bit, and this is something we'll get back to when we talk about complexities today and looking back at being a approximately $4 billion bank and all the financial things that we have going on now. You're looking at this, we're a $0 billion, not even a bank yet with this empty space. What does that look like? What does a CFO do? Where do you start?
That was my first question. Okay, where do I start? Everywhere I've been has had something in place. Right. Even the startup that was the subsidiary of Fleet had some things in place when I got there. This really had nothing. So I'm like, okay, well, I need a general ledger. So now it's create a chart of accounts and do all the things from an accounting standpoint to create the process. And then it's talking to Shashil, okay, what are the things we're going to be doing? Incorporate that into the system. We didn't have, at that point, we needed someone from deposit ops. So I was able to grab a really good person from my old bank that was willing to join as well. So, okay, one checkbox. I needed a good entry-level staff accountant. I'm like, we somehow managed to find this kid that was just like energetic, smart, hungry, like perfect first hire. So, okay, 2 for 2 in terms of just the hiring. Put the processes in place, put the procedures in place. You get a couple good, smart people, and off you go. And then I remember the first day, we're like, okay, we're going to open the doors in an hour. What's going to happen? Is anybody going to come in? Now,
this is at a time where really online banking wasn't a big thing.
No.
And you want people physically walking in the door.
That is correct.
Now, you weren't in charge of the marketing and the fanfare and everything else, but you still had to have a financial institution in place that was ready to accept money and make loans and all kinds of things.
Right. And keep in mind, we are only about 6 or 7 months after the whole 9/11.
Wow, I had never really considered that. Yes,
right. There's a whole lot of backdrop in the economic environment as well. And Shashil had already arranged for a bunch of people to come in. So the first day was great. Okay, checkbox 1. Okay, now we move on to day 2, which in some ways is more scary than day 1. And you're like, okay. And people just kept coming in. So my roles back then were, people would be like, okay, why do I want to put money in this bank that's been open for 2 days? It's a very natural question, very good question to ask. So I, as the CFO, would actually sit down with some clients back then. Shashir would sit down with clients back then, explain to them the bank, what it's doing, where it's going, FDIC insurance, which was very important for us during those opening days.
So you're bringing folks in hopes that they will bank with a company that has no financial history, mm-hmm. and you're giving them promises of the bank to come, and really that's all you have.
That's all we have. We have tremendous capital ratios, which in the banking world is pretty important.
But most customers don't look at that.
Most customers don't look at that.
So every time I talk to you, I feel like I learn something new. And in my role, I've learned a lot of things from you. And yet I'm still sort of at that stage where, to me, banking is we take in some deposits, we make some loans, and that's the core function, right? But at this point, you don't have a lot of deposits, and you have to start generating some kind of financial turnover to be able to get these loans made, to enact some sort of revenue and income. What does that look like for a CFO? Do you sit down and just chart out what the goals look like? Do you have parameters, how much we can or can't lend? Do you start with some seed money?
We started with, so Shashil was successful at raising money like literally during the months after 9/11.
Not for deposit accounts, but
Not-
as actual capital
As
investment
seed money
in the bank.
for the bank itself.
Okay.
So you've got that seed money, and you can lend that out, and then you do bring in deposits, and we all have friends. We all got our friends and family to bank with us, and then word spread. We started advertising right away, primarily focused in Arlington, and then we kind of built it out from there. We were able to leverage certain other things. Shashil owned a mortgage company, so we were able to very quickly get closing attorneys to join with us. We were able to get a couple of pretty good loan originators to join with us. We were able to get approved by Fannie Mae in record-setting time because of the relationship.
So the old adage of who you know really
The
came
old
to
adage,
play.
very true.
So now I don't want to fast forward the whole 20 years, but just sort of fast forward maybe 5 years at a time and kind of think through. Now the bank is taking off. You are going to get to that billion that he promised and so on and so forth. Your role is the exact same in title, but I can't imagine it's functionally anything like where it was started. Talk to me a little bit about how your leadership turned this into a department where now you have lots of staff, you have a full-time controller, an assistant controller, you have accounting managers, you have staff accountants, you have entire departments related to accounts payable and wires and all these things that at the beginning it was just you and two people.
Correct.
So how do you lead that? What are some lessons you learned along the way of I'm Brian, I have to make this work?
I'm Brian, I need to make this work, but I can't make this work by myself. The key is to hire good people. If you can hire people smarter than you, because the more they can do, the more the bank can do.
Explain that concept.
So if I hire you and you're smarter than me,
thanks.
Well,
you didn't hire me, so I guess it doesn't work. Close enough.
I think I might have been involved in the decision back in the day.
Thank you.
And it was a good hire.
Anyway.
Anyways.
If you were to hire me, and if I were to be smarter than you, then you were going to say?
Then you're going to have a lot of good ideas. You say, hey, why don't we do this? And the one thing when you're a startup that really translates for forever, you need to be willing to change. Like the skills that you have to open a bank and run a startup are not the same skill set that you need when you become a mature bank.
Right.
And it doesn't change overnight. It's a very slow evolution or change process. So for instance, during those first couple months, we'll go to the extreme, there was no support staff really. If the ladies' room toilet was clogged, I was the facility staff. I would go clean it, or Shashir would do it, like unclog it and off you go. Eventually you go and you hire people with specific knowledge of things. So at the beginning we didn't have a dedicated IT person. As you move on, you hire some entry-level IT people, then advanced IT people. Now, as a mature bank, you have very advanced IT people. But the whole time, you want to hire people that are smarter, they're even smarter than what their prior grade level was.
So start small but think big?
That's a good way to put it. I didn't look at it that way, but yeah.
I mean, I love what you're saying here, and one thing that resonated with me is it's kind of obvious when you hear it, but it's not necessarily obvious until you hear it, is this idea of always being open to change. And we've had this push at the bank in the last couple of years really to formulate and come up with our brand identity, who we are, who we want to be. Of course, we want to obsess about our clients. Every company should want to do that. But you put something down in writing and you say, this is really what we're doing. And I feel like that has really encouraged, also from the inside, more conversation and more new ideas coming up and things, so that we are still innovating and coming up with new ideas today, much like you described, you sort of had to do, you had no choice back then.
Right. So it becomes embedded in you. Yeah. And you're right. 10 years from now, we need to still be creating new ideas, new ways to take care of the customer. One of the things I learned in college was I had this great small business finance professor, and he went on about, you're going to learn all kinds of formulas, all kinds of ways to do business, but really just remember two things if all you get out of your entire college career are these two things, and you remember them, you'll have spent all this money in a wise way. I'm like, okay, go ahead. And he goes, one, running a business, just take care of your customer. If you do that, a whole lot of things are going to go right. And number two, just take care of your employees. Who are the people that take care of number one? Right. They're number two. If you do those two things, if you focus on those two things, you will always be successful, pretty much. Now, the key with all that is the client or the customer's needs are always going to be changing. The clients, when we opened, as you said before, we're not really looking for internet banking or mobile banking or any of those technology type of things.
But now they are.
So that their needs have evolved. So if we weren't focused on trying to get ahead of that curve, we wouldn't evolve.
But this idea of the customer is always right and putting your customers first, putting your team members first, great ideals, right? Mm-hmm. But traditionally, we don't think of that really in banking. You go and you buy, I don't know, a piece of clothing, you spend $50 on it, you bring it back the next day and you're like, this thing makes me itch, I hate it, whatever else. They're supposed to make it right and either give you your money back or give you a new t-shirt or something else. You walk into the bank and you're like, well, I lost $50 because you had nothing to do with and they're blaming you for it. You can't just go hand them $50. That's not how banking works, right? No. But yet you still have to maintain that trust and that people want to put their money with you and that it'll be there when they need to get it back out. How does that different from that retail environment where you could just hand out a different new shirt and say, here, take this one instead?
Banking is all about trust, trust from the consumer. So how do you build that trust? I think the important thing is you have to listen to what they're saying. If your first reaction is no, well, that's not good business.
Right.
And it's not good
in any
customer
environment.
service. In any environment, whether you're the retail store or whether you're a bank. So listen to what they have to say. Maybe they do have a point. Maybe we did do something that made them lose that $50. Okay? Maybe we have to consider making them whole. Or just the fact that you're going to listen to what their viewpoint is, that alone means a lot.
The example in my mind is someone who unfortunately gets scammed, mm-hmm. and it wasn't the bank's fault at all. And they initiated giving this money away to a scammer, and they come back and they want to somehow have us fix it for them, and we can't. We didn't do anything. But you're right. You listen and you explain where they're coming from. It goes a long way.
It really does.
So now we're talking about the customer. Let's talk a little bit about corporate and community leadership, right? So if Brian Taylor runs the bank into the ground as the CFO, that's not just going to hurt our team members that now don't have a job anymore. That's going to hurt the community, the standing we have in our areas, in our neighborhood, and the very people that depend on us for this banking and for these loans. So I kind of want to hear a bit from you about how corporate and community leadership is a factor maybe in how you think about the financial decisions that you make as a CFO.
Well, some of it goes back to number one before. The community are your clients. Everyone in the community is a potential client.
So when you're making decisions about Leader Bank's balance sheet and moving forward and big fancy financial terms, the customer is, in your perspective, part of that conversation, even if they're not sitting at the table physically.
That's correct. The client needs to be. But I also have to keep the banks. One of the key things is I need to keep the banks safe. Right. So things to consider are when things happen in the world, you need to be able to react. So let's take the case of what happened in March, where we had a series of pretty large banks that are no longer around.
And unease that comes with the customer base as a result of that.
Correct. There's a lot of unease that develops, and you have to kind of react to that. So you need to make sure that the bank is safe, that the bank is worthy of the trust that the clients have placed in you.
What does it mean in lay terms for a bank to be safe?
So in lay terms, one of the things we look at it as we want to be liquid, meaning if anybody comes in, we've all seen the movie It's a Wonderful Life. they had a run on the bank. Yep. So in those days, people had to physically walk in, and Jimmy Stewart's there, and he's saying, your money's not here, your money's in this house, your money's in here.
Hey, they stood outside the bank this March, and we're standing in line to get money. So it's still a thing.
It's still a thing.
Okay.
But now things can happen a lot faster.
Why is that?
Internet banking. If Greg wants to remove his money from Bank X, all he has to do is go online, do an ACH transmittal, and the money can be someplace else tomorrow. So things move very quickly.
So it's easier for customers to enact that, I hate to use the word, but panic that you see when there's unease in the environment.
Right. So now we don't, when I talk
we can't
liquidity,
just keep people from taking their money. They're allowed to take their money.
They're allowed to take their money.
Right.
And they should have access to their money. So what we do now is we keep what we call extra cash balances. We don't keep it in the vault.
It's not physical.
It's not physical cash like
right.
like was in the movie.
But it's available money.
It's available money. So we keep our money generally at the Federal Reserve Bank of Boston. Okay. So we'll keep hundreds of millions of dollars there, not earning as much as potentially we could in loans, but making that choice to provide safety and trust in the banking for us in the whole banking system.
So now, an intentionally naive question to that: would the Federal Reserve Bank ever run out of money?
Only if the U.S. Treasury runs out of money.
Okay, so by design, that's never going to run out.
By design, that's never going to run out.
So that's a very safe place to have this extra liquidity that you're speaking of.
There is no safer place in the world, in my opinion.
Not even Fort Knox.
Not even Fort Knox.
I love it. Okay.
That would be gold bullion.
Okay, so we have this reserve so that if we need to access cash unexpectedly, we have a way to do that. And why is that important? What would happen if we didn't have access to that money?
Think the banks that went out of business. They ran out of money. They were profitable banks. They were making money until they ran low on cash.
And so then you're at a point where they couldn't hand out actual money to their customers.
Right.
And that's what ultimately led to the takeovers and the collapse.
Right. Basically, they had that run on a bank scenario. They ran out of cash. They ended up being closed.
So besides having the extra liquidity, how has that impacted your own outlook on financial risk management and how we want to run things here?
Lessons learned from the Brian Taylor viewpoint. So we do modeling. We do a lot of modeling in terms of what happens if.
Okay.
And some of the models are what happens if interest rates go up by 1%. 15 months ago, looking at the models, I said, okay, well, the likelihood of going up 100, pretty high. 200, okay. 300 in a year, less so. 400 in a year, even less. And we didn't even model the up 500. So I'm like, and I kind of discounted it. I'm like, it's not going to go up 500 basis points 400 basis points in a year.
You're probably not alone. Most people wouldn't have expected this.
Well, maybe lesson learned. Maybe I should have. Right? Maybe I should have thought of the potential.
So now that it's gone up 5, maybe we would be naive to think it would go up another 5, right? But you have to be prepared for the next unknown, which might not be a significant rate change. It could be something else.
That's correct.
So how do you prepare for the unknown?
Banking has a history of a lot of different types of unknowns. So a liquidity event is not a new event. Going up 500 basis points, although very uncommon. If you look back to the 1980s, interest rates got up into the 18%. So
there's a historical precedent.
Correct.
That things could go further than they've gone.
Exactly. So I'm still looking at, okay, what happens to our balance sheet if rates go up further from here? Even though when I listen to economists, when I listen to other people, rates later on this year, there's potential for them to go down. Okay, so that means we as a bank and I as the CFO need to prepare the bank and the bank's balance sheet if interest rates go up more than what they're doing or if interest rates go down. And one of those things is you become more liquid. There's different things and strategies to employ, but basically the lesson learned is you need to be ready for pretty much anything.
So financial flexibility is the key lesson from these banking events.
Correct.
All right. So lastly, kind of as we go to wrap up here, I mentioned earlier that we had a gentleman named Marty on last episode, and he did a great job of talking to us about what's called professional brand or theme. And this is something I've been thinking about since that conversation as well. It just came up in conversation with another team member the other day, and we were talking about our own individual sort of brand or theme. And he talked about blending imagination with results, which speaks to all of us, I think, in the sense that we want to be innovative, but we also have a company to run at the end of the day. Do you have a theme or sort of a particular mantra that you live by that's the Brian Taylor way?
I don't know that I have a Brian Taylor way. I have a couple of philosophies maybe in life.
Okay.
One of them is, I don't know where I got it, but many years ago someone showed me this poem called Man in the Mirror. Not the Michael Jackson song. This is an actual 20-line poem. Okay. And basically it says, don't worry about anything else in the world. If you can look in the mirror and the person looking back at you is giving you a good look and you can look that person in the eye, okay, things are good. Great poem, by the way. Like I said, only 20 lines long.
I'll have to look it up because that is definitely good advice, and I've heard it said other ways,
right.
Similar sort of concepts, but yeah, you have to be at peace and take care of who you are before you can go out and do things for others.
And the second piece of my philosophy is really, you can't change yesterday.
Okay.
If you did it right yesterday, if you did it wrong yesterday, doesn't matter.
But you can change how you go forward.
But you can change how you go forward, and you can learn from yesterday. Like we all make mistakes, but those mistakes are in the past. Now you learn from them, and hopefully you don't repeat them. Right. You make new mistakes, and you got to be willing to make the new mistakes.
Is there a particular, you mentioned your business professor and the 2 points, is there any other particular advice that you would give to young professionals starting out who are maybe doing just like you did? They graduated with an accounting degree, they stumble upon some old books and they go, oh, this is what I'm meant to do. What's next? What do you tell them?
I would say, so if you can go to a place, like I lucked into going to a place, a public accounting firm that gave me tremendous variety of opportunities. And so I was at, like I said, defense contractors, I was at banks, manufacturers, working with all kinds of different people. That kind of an environment is a great environment to be in. If you can surround yourself with people from different everythings, you're going to learn a whole bunch of different things. Because early in your career, you don't really know where you're going to end up. So the more experiences you can have when you're young, the better.
Awesome. Thank you so much, Brian. Like I said earlier, I feel like I always learn something when I talk to you, and we've had so many conversations. We've played tennis outside of the office. We've gone on walks and talked about me and my career future. We've never really talked about you, and this was awesome. I really appreciate taking the time and hearing your background and all the interesting little steps along the way. In particular, that opening of the branch and looking into the basement.
That
kind of gives you an appreciation of where we've come, and thank you for taking us there.
Thank you, Greg. The Man in the Mirror by Dale Wimbrow. When you get all you want and you struggle for self, and the world makes you king for a day, then go to the mirror and look at yourself and see what the man has to say. For it isn't your mother, your father, or wife whose judgment upon you must pass, but the man whose verdict counts most in your life is the one staring back from the glass. He's the fellow to please, never mind all the rest, for he's with you right to the end. And you've passed your most difficult test if the man in the glass is your friend. You may be like Jack Horner and chisel a plum and think you're a wonderful guy, but the man in the glass says you're only a bum if you can't look him straight in the eye. You can fool the whole world down the highway of years, and you can take pats on the back as you pass, but your final reward will be heartache and tears if you cheated the man in the glass.
For more information on today's subject, visit leaderbank.com. In addition to past episodes, you can also find our corresponding blog entries for more insights. This podcast is a production of LeaderBank NA, Equal Housing Lender, member FDIC, NMLS number 449250.